Hi everybody, it's Corrie Sommers. Today's Financial Friday with Denise from Elite Financial. Our topic is taxes. She's going to be discussing how you're taxed. This is very important information that you need to know, so be sure to stay tuned.
Hey everyone, this is Denise Berry with Elite Empire Financial, and I'm proud to be on Corrie Sommers' channel sharing some basic financial concepts with you guys today. So we've already gone over how to get out of debt, we've gone over, how to recover from loss, but today we're actually going to talk about how we're taxed. Yes, it's inevitable we get taxed every single year, but you guys are going to learn some key concepts and things that I didn't learn about through my education and how I'm going to teach them to you today in a couple of minutes. Okay, so there's 3 different ways that we're taxed. Of course, everybody knows that we're taxed every single year. That tax box is called Tax Me Now, right? Some of those places that we're taxed is on our paycheck, right? Every single time we get taxed, every time we get paid, we get taxed and it's taken out, right? So the places that we're taxed is going to be checking, savings accounts, stocks, things that are this year that we're getting money right now, okay? The next tax box is tax-deferred, or Americans like to call it tax me later, right? We're not looking to pay taxes now, so they're like, hey, let me get you later. This used to make sense prior to the Reagan administration, right? There was a tax bracket that was specifically for senior citizens that were in a retirement tax bracket, but that no longer exists. So let me ask you guys, do you feel like taxes are going up or are they going down? Most likely, with our country's debt, national debt, most likely they're going up. Someone has to pay for that, and it's going to be the general public, okay? So when you actually go and you take distributions from your 401k, your 403b, your SEP IRA, your traditional IRA, any of these places that are tax deferred, you're going to be taxed at every distribution that you take, every amount of money throughout retirement, every single time, and at the tax bracket that you're in. So a lot of people like to make the argument of, well, I'm going to be in a very low tax bracket because I'm going to not be having a lot of things to pay for, I'm not going to be making a lot of money. Well, to be honest, I personally don't like to set up people for failure. So I don't want them to be making little bits of money because they don't have high overhead. I want you guys to have financial freedom throughout retirement and not be expecting to make $2,000 in the future. How are you going to be able to survive when inflation goes up by about 3 to 4% a year? It's not going to work out for you, including the fact that Social Security may not exist at the way that, in the capacity that it's going currently. Correct? All right, so now the last bucket is our tax-exempt bucket. So a lot of people don't know about this bucket, and I personally didn't know about it either, right? I got an MBA, I didn't learn about any of this. So you guys are not alone in not knowing. So there's the tax-exempt bucket. Essentially, we've heard about the Roth IRA, but the Roth IRA has its own restrictions and requirements. The restriction for the Roth IRA, it has a contribution cap, meaning that you can only contribute up to a certain amount of money. This goes up by about $500 a year. So depending on if you're married or you're unmarried, that contribution limit is going to range, around $6,000 and upwards if you're married a year. But now there's also an income cap. So if you're making a cool $150,000 as a single individual, you can't even contribute to a Roth IRA, which is really not fun because what if you already had a Roth IRA and you got a promotion? Now you can no longer contribute to that long-term account. It's not really fun. So those are some of the little nuances of a Roth, but all of the cash that's grown in that account, that growth is tax-free, which is great. So when you go to take distributions, that money is all yours. All right, what's another place that's tax-exempt? We also have permanent life insurance, right? And this I did not understand in the beginning. I thought we just rented life insurance for the death benefit. But it turns out that there's a living benefit and a death benefit to permanent life insurance. So the living benefit is cash accumulation that's grown over time, and you're able to take distributions and build retirement inside of that account. So when I go to take distributions from my IUL, Index Universal Life Policy, I have it with Pac Life, everyone's different. When I go to take distributions, right, they're going to be tax-free every single time throughout my retirement. I set it up that way and you can too. Why would I put my money there? These are the after-tax dollars. They taxed me during the year. My after-tax dollars were put inside of this account and it was able to grow. Hopefully that makes sense for you guys. But also, why would they allow it to be non-taxed? So, as you guys most likely know, there's a cost for insurance. And that cost is rated on our health. How healthy are we? So if you guys look at cost of insurance versus taxes and you're in great health, cost of insurance will always win because it will be lower than taxes, period. So you always have to weigh. If you're older and you have health issues, hey, maybe taxes is the way to go for you. You have to look at suitability. What's suitable for you? So now we've kind of gone over some taxes. I hope you guys feel a little bit more prepared on how to go forward and what to be looking into. So reach out to Corrie if you have any questions as regards to taxes, and of course reach out to your tax professional. Thank you guys so much and have a great day.
Thank you guys for watching today's Financial Friday with Denise of Elite Financial. Be sure to let us know your thoughts. Comment below if you've gained anything from this or if there's another topic you would like to hear about. Of course, you can also schedule a free consultation to see where you might have holes in your retirement. 3 out of 4 Americans are retiring in poverty. This is a serious issue. And we're doing these videos as a way to help you get better educated. Yes, I sell real estate, and that's what I do full time. It is my livelihood and I love it, but it's just a small piece of your overall financial health and financial future. My goal is to get all of my clients from just buying or selling a home to financial freedom. So we can have a conversation about that as well. And if you'd like to get on my newsletter, I do work out discounts with local business owners and businesses, so it's something great to be a part of. And be sure to watch my interview with community business owners. See you guys next time. Thanks for tuning in.